Well, the unbelievable and, to be honest, ridiculous movements in the Australian market are continuing. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Thursday the 21st of August 2025, and before I start, you do need to be aware that whatever I say is general advice only. The big news around the world this week is the discussion around rate cuts. So the market in the US has priced in a near certainty of a Federal Reserve rate cut in September, and our market is also expecting a RBA rate cut again at the end of September. So with rate cuts priced in, they've been the big driver of gains for global share markets for the past 2 years. That's continuing to be the case. For me, this bull market really started back in October 2023. So we are getting to the 2-year mark for this bull market. Markets do tend to move in cycles. Will October be a bit of a turning point as we move to a new sort of chronological cycle? I'm not too sure. I think for as long as markets are pricing in further rate cuts, and as long as the US dollar hasn't fully collapsed, we will see markets continue higher. The moment that we see a change in expectations on rate cuts is when we will see things turn, in my opinion, or when we see the US dollar collapse under the weight of US government money printing, which is extreme. So those are the two things I'm watching. But for now, markets seem happy to jump over themselves to price in continued rate cuts. The big sort of question for that in the short term is the Federal Reserve Policy Symposium. That's going on this week in Jackson Hole, Wyoming. Absolutely beautiful location. They're not going to meet in somewhere crappy looking, that's for sure. They're going to meet in a beautiful part of the world with the freshest of air and the most beautiful scenery. So the Fed board members will be meeting there, and they'll be discussing with their employees. They'll be discussing what sort of changes to monetary policy they should make, and then we will see a speech from Fed Chair Jerome Powell on Friday that'll outline what agreements they've made, what conclusions they've made, what groundbreaking discoveries they've made. I don't think there's going to be much, but the market will be looking for clues as to whether they're going to favor inflation over the economy at that September rate meeting. As I mentioned, for now, the market's fully expecting them to favor the economy, and the economic data has been weakening in the US. We've seen US unemployment rise for 3 months straight now. Other US economic measurables have been pretty poor as well. Now, at the same time, we've seen their inflation start to tick a little bit higher. So usually when inflation's rising, you don't expect rate cuts, but the market is basically pricing in the rate cut, saying that they're going to favor the economy instead of inflation. Part of the reason I think the market is taking that view is because that's the president's view. That's what Trump is saying. Trump is saying the Fed has to cut rates, pump up the economy, blah blah blah, and the market's happy to sort of continue with the view that Trump has a bit of a say here. He doesn't really have a say here, and to be honest, I don't think he can fire Jerome Powell either. And even then, it's not Jerome Powell who decides on interest rates unilaterally as well. For his part, Powell has basically continued to say that inflation is, the main focal point, and that they're worried the tariffs are leading to higher inflation, which they are, and that they can't cut rates in the short term until they see what the effects of the tariffs are. So it could be a bit of a reckoning here on Friday with the market fully pricing in that September rate cut, yet Powell, pretty constantly reiterating that they can't cut rates just yet. So we could see a bit of movement on Friday, could trigger a bit of selling. That could be a bit of a flashpoint. If it does, I don't think it's going to be a huge move lower. I think that instead the market will then push the rate cut expectation to the next Fed meeting, if they do revise the expectation for September. Looking at our own market, 9,000. We closed above 9,000. We reached 9,000 today for the first time ever. Closed above it, and very, very strong move. Over 100-point rise, over 1% rise for the market. Comes after a series of strong gains, and we've closed at our highest ever level. It is an expiry day today for options. We did see an extreme number of options on all the major stocks and on the index itself. And part of me does wonder whether we've seen a bit of repositioning, bit of short covering, a bit of rolling out, and that's led to the big push higher. Regardless, our market does continue to rise. That's despite some, fairly mixed company earnings reporting this earnings season. We have seen some good reports, but a lot of the largest stocks have had some pretty bad reports as well. Yet we continue to rise. We've seen dividends come out of the market. I think we've had about 30 points in dividends so far, and yet the market's continued to rise. Overall, our market continues to be pushed higher and higher, and no doubt there are some cheerleaders for this. Plenty of people happy to applaud it, in the news media and around, people who are investors, I'm sure, are pretty happy with it. But I will say that it will end up hurting people, the market being this disjointed with reality. This is the most expensive our market's ever been by a considerable margin. It is a bubble, and I'm sure, again, there are people who are saying this time will be different. Bubbles don't always pop in the short term, but in the long term, they always pop. There have been plenty of times throughout history where people have gone, this time is different, and without fail, that time was never different. So this bubble will end at some point. It doesn't mean it's going to end, this month or next month or even this year, but it will end at some point. And when it does, it'll be made worse and more significant by the fact, by how overextended our market is at these levels. Totally out of sync with earnings, totally out of sync with dividends, totally out of sync with forward guidance, forward expectations, and only really a factor of rate cut expectations and government money printing. So, without those, our market would be substantially lower. And while, that would be bad for everyone's super balances, bad for people's investments, it would probably be more good for, the stability of the country in the longer term period. So a milestone level to cheer, but also perhaps one to pause and take stock at. If we have a quick look at the charts for today, this is the XJO, the Australian stock market. We have been on a strong uptrend since the lows of April. That was with the initial tariff selling. We've set a series of all-time highs over the past few months, and like I said, today we just cleared the 9,000 point level. When our market does tend to set new highs, we often do pull back fairly quickly. The previous level we broke at sort of 87.80, we pulled back for a few days and then drifted sideways for a little bit. At the level before that, we broke above 86.40, we drifted sideways for a bit. And again, the previous level, we drifted sideways for a bit after breaking that level. So I wouldn't be too surprised to see a little bit of sideways, maybe some lower movement in the short term. Perhaps for a move back towards my trend line here. Not a great trend line, but yeah, perhaps for a move back towards sort of 8,900 after today's extremely strong jump higher. If we have a quick look at the US market, and they have been also on a nice strong uptrend. They've also set some fresh highs, but they've also perhaps shown a little bit more negativity over the past week. They stalled out at their new resistance level about 64.80, and they've fallen for the past 4 sessions. They have been testing the previous resistance level as support, roughly 6,400, and they held that level overnight despite initially breaking that level. They have now broken the longer-term uptrend line, but they are still on an uptrend, so we may simply be witnessing a shallowing of the trend, and we've witnessed this trend shallow out several times throughout its course. Initially here, and then here, and then here. So just because it's broken the trend line doesn't mean it's no longer uptrending. We might just be witnessing a shallowing out of the trend. For me, they're on a bit of a support level. We'll have to wait to see what they do tonight, but the real test, like I said earlier, that's going to be on Friday night with Jerome Powell, head of the Fed, delivering the announcements from the Jackson Hole Policy Symposium. So we'll wrap it up there for this week, guys. Markets at record levels, and jumping strongly higher again. Price is extremely stretched, but still looking very strong. And some pretty mixed reporting. So hopefully you guys enjoyed. If you did, click like, click subscribe, and we'll see you guys next time.